Hello, everybody. Welcome back to another episode of the Market Futures. Folks, we're live. We are live, and my goodness, what a weekend it has been. We last talked on Friday. Friday was not a fun day. Just wasn't a fun day. And I think kind of ending message that Steve and I and Roy had on that Friday show was, hey, we're going to see what happens when we get more data, but it feels kind of like it's a buy the dip opportunity, given the last thing that we saw on Friday was Trump speaking to the media. And he said, well, I said I was going to cancel my meeting with Xi, and we're probably not going to cancel it. Over the past 48 hours, things have happened in relation to what's going on with China. And if you've taken a look at the futures, we're going to get the overnight markets open in about 14 minutes. These are the futures, blistering green, 1% across the board. Friday was one of the worst days we've had since April 21st. We were down about 3% on the day if you include the after hours move. After hours was worse before Trump gave 30 seconds of analysis of, hey, maybe the China stuff is not that big of a deal. He didn't exactly say that, but he kind of hinted at that, and markets started recovering. We were at 647 on the S&P 500. We recovered to 652, down from 675. Well, 3 hours ago, we got a tweet. And that tweet, ladies and gentlemen, is likely what is going to be saving the bull market potentially, or at least not create that much more pain. Here's what Trump says. Don't worry about China. It will be all fine. Highly respected President Xi just had a bad moment. Literally, he's calling him highly respected. The dude was throwing him under the bus on Friday, saying that President Xi doesn't want to work with the rest of the world leaders. So it's a totally different 180 tone shift. He then goes on to say he doesn't want depression for his country, and neither do I. The USA wants to help China, not hurt it. President DJT. This is wild, bro. We are living in a wild timeline, but we got the taco. And honestly, this taco kind of feels like it's a taco around miscommunication, because China's foreign ministry came out, and we'll talk a lot about what they said over the weekend as well. But in a nutshell, based on what you're seeing right here on the screen, they said, hey, we don't want to escalate this with the United States. We really don't. They said, we're not trying to ban rare earth metals from coming to different countries. We have to take our own defensive measures. The United States is being too aggressive with 100% tariffs. China is imposing port fees on U.S. ships in retaliation. And then they kind of said at the end, we urge the U.S. to correct their erroneous actions and engage in dialogue, aka diplomacy, in order to work with us. The way Trump tweeted on Friday, which caused the markets to go down 3%, and the after hours was another 1% when Trump said that he's intent on putting these 100% tariffs on China November 1st. The way he was acting was almost as if China is isolating themselves across the entire world by sending these threatening letters to other countries to not be able to get to not be able to get rare earth minerals based on these export controls. And China's foreign ministry comes out last night. I was live with Steve on his channel, and they're like, that's not really what we're doing. That's not actually what's happening. And we're not trying to be as aggressive with the United States. And that's why I think we got the pivot from Trump today, basically acknowledging, yeah, Xi had a bad moment. It wasn't that big of a deal. He even said from now until November 1st is an eternity, which likely means that we're not going to get these 100% tariffs on China. I mean, does Trump really want to ruin Q4, which is supposed to be a pretty strong Q4 as we get into Q3 earnings, which we'll talk about today? We are starting earnings week, by the way. This is going to be a big week. We're getting into earnings. Does he really want to ruin that with 100% tariffs on China? I mean, it didn't make sense when we saw the tweets. And if you bought the dip, it looks like in about 10 minutes when the overnight markets open, you may be rewarded. Bitcoin, 106 to 115. It's down from 125, still down from Wednesday. But I mean, it bottomed all the way at 106 on Friday night, and now it's back. Ethereum got all the way to 3,400. Now it's back to 4,152. I mean, this was a massive weekend. And the other real reason it was massive, and we'll talk more about this when we get into the overnight markets, when we look at price action. Do people know how bad the crypto liquidations were? 19.5 billion. And again, thank you everybody for being here tonight. 19.5 billion was liquidated from the crypto markets. There were people that were on perpetual futures contracts, which allow you to leverage up from $1 to at the most sometimes $250. And you can say, hey, I'm bullish on Bitcoin. Here's 10,000. That 10,000 turns into 500,000. Bitcoin goes down and then you lose a lot more than 500,000. This has happened to about 1.6 million accounts was the official number. And 19 billion, FTX had 2 billion liquidated. COVID had about 3 billion. A Trump Truth Social tweet, along with some internal issues with Binance, which they came out today and said, yeah, we had some issues, but it all kind of just happened at once. That led to a $19.5 billion liquidation in the crypto markets. I mean, it was just pretty aggressive. I mean, there was people that, there were stories of people committing suicide. I mean, it was bad, dude. It was like people really lost a lot of money. And as a result of losing that money, it's kind of hard to navigate your emotions now because, I mean, Bitcoin and Ethereum are back. And it's almost like this whole Truth Social thing that caused the crypto liquidations didn't even matter. And so we'll dive a little bit deeper into why it happened or kind of the psychology about how this played out. But at its core, it just wasn't as big of a deal. But the liquidations, unfortunately, once they happen, and then you're done. And that was kind of the pain that we saw. By the way, the real, crazy thing about this is that there was someone who opened up an account on Hyperliquid. Hyperliquid is a platform that allows you to go long and short on these sort of perpetual contracts. They made $192 million. This is the P&L that you can see. All of this is transparent via the blockchain. And they did it 30 minutes before the Trump tariff announcement. They went short Bitcoin, short Ethereum. They made 104 million on Bitcoin, 88 million on Ethereum, made 192 million in profits. So obviously someone knew that there was some announcement coming, and it's leading to a lot of speculation about, hey, did Barron Trump know a little bit about it? And then did he load up at calls at 3:50 p.m. after cashing out his shorts? But it has just been a wild day. Yeah, CoffeeZilla did do a good video on it, talking about how it's almost inevitable that there had to be someone who had inside information. Otherwise, and by the way, that Hyperliquid account, that's like me opening up a Coinbase account for the first time just to go short on something. That person opened up that Hyperliquid account that morning. So it's not like this was a user that's been around for a long time. It's like, no, they legit opened a new account just to place this trade, probably because they didn't want their other trades associated with this one, because this one's going to be looked into a lot. But that's what they did. And as a result, you had someone make $200 million from this Trump announcement, and you had people lose $19.5 billion over the past 48 hours. Wild. Absolutely wild. Let me know in the chat what you're thinking. If you have one or two words to describe what has happened over the past 48 hours. Again, for those that are just joining, you should be relatively bullish. In the next 6 minutes, I think we're going to see a gap up that is going to be aggressive across the entire market. Futures are green by 1%. We're probably not going to recover everything, but we'll talk more after the overnight markets on what I think could happen tomorrow, because it could be one of the most unprecedented Mondays we've seen in October history based on the dynamics of how this has played out over the weekend. But it is quite incredible to see this play out. This was Trump about 30 minutes ago on Air Force One talking about China.
China, you've been truthing about another world leader. You said not to worry about China, but he's been putting out some tough statements in regards to your tariffs, sir. Are you planning to speak with him? When's the last time you spoke?
We're putting out tough statements because we are taking in hundreds of billions of dollars, not only from China, from other countries. We've become a wealthy country again, and the tariffs have given us a diplomatic strength. They've given us negotiating strength. I settled a few of the wars just based on tariffs. I said, as an example, with India and with Pakistan, I said, if you guys want to fight a war and you have nuclear weapons, I'm going to put big tariffs on you both, like 100%, 150, and 200%. No, don't do that. I said, I'm putting tariffs. I had that thing settled in 24 hours. If I didn't have tariffs, you could have never settled that war. You do that better than anybody, McGee.
First more tariffs on China. Are you considering walking that back?
Who are you with?
Politico, Dasha Burns, sir.
Dasha Politico. Politico's gone bad. They've been so wrong about everything. Politico has been so wrong about everything. Let's get somebody else to ask some questions. You mind? Is that all right? This Politico is fake news.
Do you plan on meeting with Xi now when you go to Asia in a couple of weeks?
Well, you saw the statement I put out that he had a bad day. And I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader. And I have a great relationship with him. I think we'll get it set. I know what happened. I really understand what happened. And I'm not even saying he's wrong. But then we met him with something much tougher than what he did to us. Again, because of the tariffs, it's much tougher.
So, I mean, that is a full 180 tone shift from the Truth Social post that we had on Friday. And likely it's because of what the Chinese foreign ministry said, which if you were live with me and Steve last night on his channel, we got, I think it was at 12:30 a.m. Eastern time. And they put out that big statement of just like, hey, we're not trying to escalate this. And then JD Vance this morning continued the de-escalation. He basically said everything that Trump said just now that you saw in that clip, which is we appreciate the friendship that Trump has developed with China, calling them friends. We want to be good negotiators. We want to be reasonable with China. We don't want to use leverage with them. So across the board, this 3% sell-off, which I think has more calculated than not based on the dynamics of the market not having a 3% down day or even a 2% down day since April 21st. It needed to happen inevitably. It just used this Truth Social China spat as a reason to happen, and it was painful for everybody. But given the nature of this market, these dips don't last that often. And as a result, I think you might see a gap up tomorrow. And we'll talk a lot more about what could happen tomorrow. But over the past 48 hours, it's been de-escalated from the president and the vice president, which is pretty wild. And crypto's telling you right now how much they don't think this might be as big of an issue. We got 3 minutes until the overnight markets open. Put in the chat the name that you bought the dip on the most. I asked this question on Friday on the close, and I think there were literally thousands of comments of people buying the dip. So retail, once again, I mean, we'll probably get official aggregated sort of numerical data on this probably in the next 2 weeks when this is all calculated. But I think retail bought heavy on Friday, and potentially that can continue into Monday. But it really does feel like retail saw through this. I mean, I bought some grabs. Steve bought BMNR. I think Tanner bought some BMNR. Like just across the entire board. Chris bought BMNR. A bunch of like the friends of the channel that I talked, Matt bought a ton of stuff. Like I think most of us ended up just buying the dip, whatever we could. And it seems like that's the same in the chat. I see a ton of BMNRs. I see a ton of grabs. I see Amazon got down to 212. Iran went from 70 to 59. Gene says this was our yen carry trade moment. It might be. Based on tomorrow's price action, this might be the yen carry trade moment. Now, yen carry trade, the S&P fell down 10%. This was down 3%. But given just the velocity of how it fell, who knows? Maybe tomorrow, that's what it ends up turning out to be. I see a bunch of AMDs, NVIDIAs. I mean, dude, NVIDIA was at 195, fell down to 180. Like, did it really deserve to go down to 180? Probably not. So after we see what the overnight markets look like, we'll talk about what the game plan is for this week. But I mean, it did not feel like those stocks deserve to go down there. But again, if the algos are taking everything down, then everything's going down. And I think that's what we saw on Friday. We'll also talk about some risks to the bull thesis because maybe there's some stuff we're not factoring in going into next week. October is the most volatile month of the year. It has 193 plus 1% or down 1% days over the past 10 years. So it is the most volatile month. And we've officially experienced that volatility to the downside. So we'll try to find some cracks in the thesis for how this changes this week and if it continues bearish. But as of now, based on what Trump is saying from his mouth and then based on how the futures are reacting, they are not that scared about how this is playing out. And as a result, let's see how the overnight markets open. Here we go. Let's get into it. Robinhood up 3.5%, 143.92, up from 139. Palantir is up 1.45%. That is green. Tesla up $7. That's at 420. Nvidia from 183 to 187. That's up 2%. S&P, that's up 1.5%. Bitmine's probably at 55. Bitmine, there you go, 51 to 55 on Bitmine. SoFi, that's up 4%. 27.33. AMD, that's up 3%. 220. Grab doesn't really trade overnights, has low liquidity, but 581 to 586. Reddit, that's at 200. Amazon, that's right back at 219 from 212. PayPal, 67 to 71. Salesforce, that's up a little bit. Elf is up a little bit. Apple's up 1%. SMCI, that's up 2%. Bitcoin and Ethereum both continue to do what they're doing. Rocket Lab, which hit 73.50 or 73.50 last week, that's up to 67.69. That closed all the way down in the low 60s. BABA right there, that's up 3.5%. Again, BABA, China, that's why that one got wrecked. IWM is up 1.3%. The VIX was up 30% on Friday. Usually when you get a VIX spike above 20%, that tends to be, okay, that's enough panic and people start buying, and maybe that's going to be proven true again as we get into the market open tomorrow. S&P again up 661.12%. Applied Digital, I don't think they trade overnight. They don't. I don't think we have a move there, 34 or 56. But, you know, that one lost a lot of its move on Friday, but well, it's trading a little bit overnight. But that one still is pretty damn green based on the earnings that came out a couple of days ago. USAR, all of the rare earth mineral companies should continue to get some love. Look at that. That one's doing its thing, up about 9%. Again, Pounce right there, 179. Robinhood, 144.91. Where's Iran? Iran is at 64. It's up 7%. This is crazy, bro. I think we got a little bit of an April dip inside of October. It's not as aggressive as it was in April because it's not as prolonged as this whole new Liberation Day that played out in front of us back then. But it was a hiccup in the context of China relations, which was like pseudo tariff related. I mean, it was exactly a tariff related, but it was pseudo Liberation Day based on the same type of rhetorical arguments that Trump was using against China. And it just feels like the same rhetoric that ended up being a buy the dip opportunity is replicating itself. And Trump didn't tweet buy yet like he did in April. It's a great time to buy. But his tweet 3 hours ago basically signals it's a great time to buy. I mean, he's literally saying, don't worry about China, which to me is saying, it's not that big of a deal. It might not be that big of a deal. BMNR is at 56.30. That's a $5 move. It's a big, big, big move. PayPal right there, 71.60. I ended down Friday, 215 grand. So it was a pretty ugly Friday. And I think a lot of people also felt how ugly it was. Folks, we are up 199 as the overnight markets open. We're up 199. So there's only 17 grand of delta. And I think it's very similar for a lot of people. That is crazy, bro. The markets are crazy. One tweet took us down 200. One tweet can take you up 200. I mean, absolute insanity. Grab right there. Grab got to 550, bro. Back at $6 right now. Google 239. Tesla right here at 425. That one got all the way down to 410. Laura says, I was negative 140K after everything. Now I'm plus 130K. That's not too bad. That's only a 10K difference. Elaine said I was down 600K on Friday. I mean, goodness gracious, bro. Where's Meta? Meta fell to 690. Meta's at 717. Look at that. NVIDIA trying to get back to 190. It was at 183. I mean, dude, realistically, if this continues into Monday, like Friday might have been one of the best dip buys over the past couple months in this bull market outside of April. And we'll talk more a little bit about why, because there's actually some statistics to kind of back up how this is playing out. But if this is the dip, then Friday might have been an incredible opportunity. ASTS right there, 85. And by the way, institutions might have missed it again on Friday, which is going to be even funnier when we get all the data on who bought this Trump Truth Social China dip. But that might be how it ends up playing out. CrowdStrike right there, 500. That's up 1.2. Coinbase is up 2.7. Rocklab up 4%. And then CoreWeave up 4.3%. Big Bear AI, is that moving after hours? 784. Yep, there you go. That's up 8.7%. I mean, pretty much everything took a hit. You had to be in energy fuels, Centrus Energy, and like Oklo to not feel the pain on Friday. Like realistically, those were the only names, nuclear and rare earths, that survived. Everything else, Oklo right there up another 4% back to 153. If you were in anything else, you probably got wrecked on Friday. It's just like algos took down everything, and it looks like that is transitioning. MP Materials, that's up another 3.4% as well. Oracle had a move above 300, 297. It closed at 292, so back up to 297. That's up 1.43% on the day. Not bad. Not bad at all. AppLovin fell to 570. Where is AppLovin? Wow, 586. Not bad. That's a $15 move in the overnight markets, up 2.6%. And USAR is up big. What a freaking weekend, bro. What a freaking weekend. We got a lot of headlines to talk about. We're going to get into a bunch of different stuff, but my goodness, what a weekend it has been. I think Friday left a ton of people deflated, but at the same time, I think most of us, at least this was the tone of what you guys were saying on the market close on Friday, we're just like, we don't believe this shit. We don't believe some random tariff threat for China is enough to just disrupt all the momentum we've been seeing going into what I think is going to be a historic Q3 earnings based on the numbers that I've been looking at. And we'll talk more about it. So it is nice to get the pivot right before we get into Q3 earnings. Now companies have the ability to show their numbers without worrying about this crazy tariff threat, which, look, it still is out there. There's a November 1st tariff deadline theoretically, but it doesn't look like Trump wants to impose it. And the market can kind of look past this and get into earnings as well. So there you go. Not bad. Let's get into headlines. Let's prepare for next week, and let's see what we've got going on. First off, let's just do this real quick. Tom Lee bought the dip on Ethereum. For those that do not know, now this is not 1000% accurate. We will find out probably tomorrow or Tuesday when they put out a press release. But this is a Twitter account / website that has been tracking the addresses associated with Bitmine. Again, they can't officially confirm it, but this is one of the most reputable sources in the industry. $479 million of Ethereum has been bought by Bitmine as per the wallet addresses that we've seen. The average price on this around 3,700. I mean, dude, the fact that Tom Lee got to buy $500 million worth of Ethereum before the pivot, and because they did this on Saturday night, Sunday morning, and the real pivot came closer to Sunday afternoon. That's when Ethereum finally gapped up above 4,000. And the fact that he got to get ETH again below 4,000, he's had about 2 opportunities to do it, and ETH looked like it was running away last week at 4,700, came right back down to 3,400. I mean, again, you just don't get those opportunities as easily. They tend to be, very quick when they happen. And given Tom Lee was on CNBC on Friday, and he was like, yeah, I think it's a buying opportunity. I'm not saying it's a nothing burger, but at the end of the day, this doesn't mess up the fundamental story. It looks like he put his money where his mouth is. And as a result, yeah, as Evan says right here, we'll find out tomorrow morning if they issue a press release. But dude, he meaningfully increased the net asset value by buying $500,000 of Ethereum, especially if Ethereum gaps up over the coming weeks, which would mean Bitmine gaps up as well. I mean, think about this. If you had puts that were assigned on Friday, let's say you had NVIDIA 180 puts and they got assigned to you on Friday, and you probably felt like shit on Friday because you got assigned some NVIDIA. And you don't know if NVIDIA is going to tank. You don't know if the market's going to tank, and you're feeling like shit because you're like, dude, I sold some puts. I thought NVIDIA from 195 wouldn't get to 180. Now, boom, I'm the owner of 100 shares at 180. And now NVIDIA's at 189. Just made $900 on that assignment, plus the premium you got for selling that put in the first place. And tomorrow morning, you're probably going to be able to sell into a ton of liquidity that's ready to buy NVIDIA at 190 because it's not at 195. And 195 was where it was at a couple of days ago, right? So it's like anyone who sold puts, I mean, this is like, is one of the most strategic ways to go into selling those puts because you got a massive volatile move to the downside. You collected all that premium, and now you're able to actually sell because you're getting all this upside liquidity that's coming in because it was a nothing burger for the reason you got assigned in the first place. It's quite incredible. Is AMKR moving overnight? I don't know if it trades overnight. I did buy AMKR. I even bought the dip. Yeah, $29.50. Okay, it closed at 28. I bought 2,000 shares at a beautiful price of $30.80, and I bought another 500 at $28.50. So my average is like $30 now. But yeah, this one I don't think deserved to go down either. But again, it fell because everything fell. And when everything falls, and whatever you can buy is whatever's on sale. And so I bought some Grab, I bought some Amcor, and we're going to see tomorrow morning how this stuff ends up opening up. Yeah, I'm not moving back out. I get to stay in the apartment. I get to stay in the apartment. We don't have to move back. I mean, I have a 1-year lease on this, so there's no way I really can move out, but we get to stay here. Okay, so let's talk about what's going to happen tomorrow. Here's my theory. I have a theory, and I'm curious if people agree with this theory or not, but this is my theory, and then we'll talk about some more macro data on terms of what happened on Friday. But this is my theory for tomorrow. My theory for tomorrow is that tomorrow could be one of the greatest days in stock market history in October on a Monday, which given October's history, and I was looking up a lot of stuff about the 1987 crash on Saturday, just reading up a lot about it. It doesn't tend to happen on Mondays in October, but maybe it could happen tomorrow. I'm saying this is a theory. Obviously, I don't know what's going to happen tomorrow, but this is my logic. If the China situation, it's a big if, but let's say it is going to be going out this way, or this is the trajectory on which this plays out. If the China situation created the largest pullback we may see before 2025 comes to an end, what do I mean by that? I mean, we're not going to get another 3% dip. That's what I mean. We've barely gotten a 1.5% dip over the past 5 months. If we are not, and we only have 3 months left of the year, if we are not going to get another dip as juicy as we got on Friday, with, again, like some stocks just stupidly went down 10, 20% that just probably didn't deserve to go down. I mean, Shopify lost $15. Like all these amazing companies that lost momentum because of what's going on with China. If that was the largest pullback we may see before 2025 comes to an end, I think tomorrow the narrative could flip to, wait a second, this dip is the dip everyone's been waiting for. I mean, in the chat for the past couple of months, we've been saying, when is the dip? When is the dip? When is the real dip? Not the random stupid headline that causes a dip, but like the real structural $20 billion crypto liquidation type of dip, which is what we got on Friday. When is that happening? When is that happening? Well, it happened on Friday. It happened on Friday. So why would tomorrow have intense buying pressure, even though it's Columbus Day, right? And you have banks that are closed. Some financial institutions are probably not going to participate in the markets tomorrow. Why could it happen? I think there's three reasons. Number one, there's trillions of dollars on the sidelines, not just in money market funds, but in high yield savings account all across the world. There's tons of money that's been waiting for a dip. Why do I think they're waiting for a dip? Well, it's kind of logical. The Fed cut rates and money market inflows have increased by 70 billion over the past 2 weeks. So you're telling me the Fed is taking away 25 bips on the risk-free rate of return that you're getting in money market funds, and they're likely going to get rid of another 50 bips of risk-free rate of returns that you're going to get in money market funds, and people are putting more money to use in money market funds. That tells me systematically a lot of the investors that have money that's risk-free and being able to generate a return without worrying about taking the risk are waiting to take some risk, but they need a better price. They need a way better price. And maybe they come to the conclusion that Friday's opportunity was the best price they're going to get. I don't know if that's going to be the case, but at the end of the day, if you're waiting for a dip, maybe you continue to wait for that 10, 20, 30, 40% crazy drawdown that some of the bears are asking for. But if you don't get that, if we get a good Q3 earnings, then I think that money maybe gets excited tomorrow and says, screw it. I'm not going to get NVIDIA at 160, but at least I'm getting it at 182 or 185 instead of 195. I'm buying it. Number two, 30% of fund managers are meeting their benchmarks. They may see this as their final chance to grab stocks down 5 to 10% from their high. So we talked about this research last week, but only 30% of fund managers have actually executed a portfolio this year that is beating the S&P 500. That means 60% of fund managers are not beating the S&P. I mean, they have no choice but to take a risk, unless they think the S&P is going to continue to crash and they want to risk manage, which is potentially something that could happen. It's probably what a lot of them felt on Friday. But now that you've got the bat signal from Trump saying, literally, don't worry about China, I think a lot of those people say, wait a second, hold on. We get to get Meta at 710 instead of 800 like it was at. We get to get Google at 230 after Google just showed off some of the best earnings we've ever seen instead of having to pay 255. Like, you're not getting the best deal ever. You're probably not getting as good of a deal as you could have got on Friday, but you're getting a deal. And as a result of getting a deal, I think that's why more money comes off the sidelines. And then finally, and this is my biggest argument for why tomorrow might be one of the greatest days we've seen in terms of buying pressure all year, I think retail is going to pile in tomorrow. I think retail is going to continue to pile in tomorrow. I mean, retail bought $100 billion of stocks in September. If you're in retail and you think this is your final opportunity to load up before the end of the year, which again might be wrong. We might get more opportunities. We might get into a war with China. Who knows what happens? But if the perception is that this is the moment, I think retail, which has been pretty sophisticated in buying the dip, they might say tomorrow, okay, we're going to buy into some of the strength because, we're gapping up from Friday, but it's still technically a pretty decent sized dip from Friday. And as a result, that might create a lot of opportunity. S&P 500 right there up 1% overnight that we may see tomorrow. So I don't know, dude. I think there's a world in which we get a lot of money that comes in. Tomorrow is a holiday. That's correct. However, the market is open. There will be a ton of financial institutions that are closed. The entire bond market is going to be closed in terms of the credit market. So treasuries are not going to trade. But even if the markets are closed and banks are closed, from that perspective, you're still going to get equity market investors who might see this as like their opportunity. And if they need an opportunity, then they're probably going to act on that opportunity. Iran moving up after hours. Look at that, 64.05. That's up 7%. Hoodie back to 145. Tesla 422, and then Palantir back to 179 as well. So we're going to see. We're going to see what happens tomorrow, but I'm very curious what people kind of think of that theory. I mean, look, I could be dead wrong on this, but it's just one of those things where it's like, logically, it makes sense to me. We've already been through this rodeo in April, and a lot of people missed the bat signal, which is DJT saying it's a great time to buy. He basically just said that yesterday. And I think the reason he said that is because he realized that it just got lost in translation, whatever happened with China, and he's ready to move on. Or maybe this was orchestrated and they were going to do this in the first place. For whatever reason it is, it seems like things have calmed down. So then the question becomes tomorrow, is there a broad market consensus across investors from all over the world saying, this is my last chance before companies put up the best Q3 earnings they put up probably in history? I mean, we're expecting double-digit earnings growth after 2 quarters of consecutive double-digit earnings growth. And as a result, I got to buy in. I'm not going to get an opportunity like this again, which is scary to say because, like, when people think they're not going to get this opportunity again, you get a little bit too euphoric and, a lot of money comes in maybe in a inadequate way. Grab right there, 614 up from 550. So you got money already moving. Amazon right there trying to break 220, but it also might be the correct approach to navigating this. And so we got to see. Pisher says, I feel your thesis is reaching. The market found a reason to retrace this. We are likely going down further. If you have a technical argument on just like the market needs to gap back down, then yeah, I mean, the thesis could be dead wrong. And whatever Trump tweeted was just like some random thing that the market used as the opportunity to gap down. I just also think the velocity of the move that happened, like if the market's going to start to, like, here's the thing. This is actually, I just thought of this on the spot right now, but I think this is really important to kind of lay out. When the market's ready to go down, it doesn't happen all at once. Like usually when it happens all at once and the VIX spikes, it's always a buying opportunity. Like almost every time when you have this like ridiculous drawdown, the market makers aren't even expecting it. I mean, the market makers make a lot of money off getting people to be fooled, right? So we'll have a 0.5% day on Monday, and then we'll gap up 2% on Tuesday. Everyone's like, oh, that was a dip. And then we go down another 1%. People are like, oh, then you buy more. Then you go down 2%. And then over time, it like ends up being a month of like, oh, we're down 3% for the month. And it just like slowly happens. Market makers make a ton of money of just like psychologically fooling people. The options market goes crazy. And that's where you get your drawdown, which inevitably reverses if companies do well and the broader macro environment changes. But it doesn't happen all at once. When it happens all at once, it's like, well, why is this happening? There has to be some catalyst. There has to be something that just shook up the entire global economy for like 20 billion. Again, 20 billion of crypto was liquidated. That is 5x more than any other liquidation event in history. And then the markets lost 3% within the tune of 3 hours. Like when that stuff happens, it feels more like it's a shock move, and shock moves don't tend to last because they're not sustainable in the market. You can't have a shock move to the upside without a bit of a pullback, and you can't have a shock move to the downside without people buying the dip because it's just too dramatic. And usually investors step in long or short. And then you've got the catalyst of rate cuts, earnings growth, and then Trump literally saying, don't worry about China. I mean, when you put all three of those together, I think there's a world where this reverses by the end of the week. We're all going to be, finding out over the next coming days, but I think it's possible. And if that's the case, we have to see. Parzival says, I mean, come on, did you see the volume in action in the market in crypto on Friday? I refuse to believe that it is over. It was too violent. You might be right. I actually take the opposite of that perspective. Because it was too violent, it feels like it was fake. Like nothing that Trump said about China fundamentally changes anything, especially, I mean, you could make an argument that it does if like we don't get rare earth metals, but based on what China's foreign ministry said, what JD Vance said, and what Trump said over the past 24 hours, it seems like they've de-escalated. Not to mention the reason he's on Air Force One right now is to head over to Israel as they finish the signing of this deal with Israel and Hamas. And that in and of itself is decent for the markets as geopolitical instability starts to calm down a bit. Now, we do have the shutdown, which hopefully, that reverses as well. Trump did say military members will get paid on the 15th. I don't think we're going to have a negotiation on the shutdown until the 15th, but he did say military members will get paid, which is a good thing. But furloughs have already started. 4,000 people have been laid off from the federal government. That is not a good thing. That's probably not the best for the economy either. But the markets have ignored the shutdown stuff for a while. So again, the question then becomes, what is the logical reason for Bitcoin to go from 125 to 106 outside of people just panic selling? Because I can't find a reason why Bitcoin went from 125 to 106 on Friday outside of people just saying, holy crap, I need to get out of the markets because I'm scared. Which is always a reason to end up buying the dip because, people that panic and that get scared like that, I mean, that stuff is very temporary. That's not a structural reason why this bull market has to end. Have there been topping signals like the meme stock ETF? 100%. And that's a lot of fraud. But I think we've pretty much analyzed this argument around all this froth vehemently by saying if all those companies go to zero, it does not change the dynamics of the market. It does not change the AI picture. It does not change anything about the Fed easing rates. It's just sections of the market that are a bit frothy. And you can either avoid those or lean into those. But maybe that's not, hey, markets have to collapse. Now, maybe those are good signals to maybe buy some puts and hedge your position, which if you look, if you hedged your entire portfolio after the meme stock ETF came out on Wednesday, you've done very well, right? Because you got a massive move on Friday. But I don't think it means get out of the market. And I think that's the most important thing. Gold up as well. Gold overnight is green, 4,025, and silver crossing 50 overnight as well. So gold and silver, which did take a little bit of a dip on the Saturday. They were actually green on Friday when the markets were collapsing, but they are back to going green. The bears are fuming. Look, if you're a bear, again, it's got to be annoying, right? Because this was the one thing you were waiting for, the one shock in the system that could finally collapse the nature of the markets. Fear and greed, by the way, at 29, still in fear. That is another signal for why it's probably more money, or why it's signaling more money could come into the market. But if you're a bear and your entire thesis was something's got to collapse, and then something happens, everything collapses, and then less than 24 hours later, there is an entire pivot on the exact thing you were waiting for to happen, aka some random geopolitical event with China and the United States. It happens, and now it's almost like it never even happened. It's got to be annoying, right? Because like your thesis is just like not working out. If we have a bad earnings, then maybe the thesis works out. If we have a recession, the thesis works out. If we don't get rate cuts, maybe. But like a Trump-China post, if you're claiming victory as a bear on that, obviously it's just not easy to claim victory when that entire narrative is reverted within 24 hours. And as a result, once again, I really do think if you bought the dip on Friday, it's going to benefit. It's going to benefit. I mean, even BMNR, bro, the amount of people that bought this thing, it got to 47 on Friday night. It's at 55.98 right now. That's a massive move up from 47. And obviously, you know, this thing was at 65 earlier in the week. So if this gets back there, obviously ETH's got to run as well. But like you just got a lot of retail that ended up buying those shares. And, you know, that's going to be good for the net ecosystem of people that are in this name and a lot of the other names that capped up. Yeah, I'm talking about the Roundhill meme stock ETF. I mean, that obviously was a signal that things were getting a little frothy, which there still are a little frothy. However, that doesn't mean get out of the market. That means maybe hedge. And then you get this Trump-China thing that makes your hedge work out. But a hedge is not meant to be long-term bearish. A hedge is literally meant to be like, hey, if something bad happens, I'm protected, at least to an extent. So for those that hedged into this week, congratulations. But even with that hedge, it's like if there's not some structural problem in the economy, I just don't know if this is the way everything plays out to the downside. So as a result, I think it's not too bad. It shook out stop losses and margin calls. Yes, let's talk about this for a second. So I think a lot of leverage got destroyed on Friday. A lot of leverage. And what do I mean by leverage? I mean the people that took $1, turned it into 50 using leverage on these perpetual future contracts. I mean people that were on margin, people that were overexposed to margin. People that had massive stop losses in case their positions gap down by 5-6%. If it gapped down, then boom, all those shares got sold. A lot of that frothiness that comes as a result of people thinking stocks should go up was obviously in the system for crypto to result in $20 billion of liquidations. That might be gone. Now, it might not be gone to a full extent, but a lot of it might not be as aggressive as it was going into Friday. And I think that's healthy. Because you can't have that much froth in the system and expect to still be making moves higher. I mean, usually the way to go up is to take a leg down, which is why buying the dip tends to work long term. Even at 12:28 p.m. today, 225 million worth of crypto shorts were liquidated in the past 2 hours. And it was a bit of a reverse from what we saw on Friday, where $20 billion worth of longs got liquidated. So the shorts have a lot more liquidating to catch up to make it equal. But as a result, it is still pretty aggressive. In fact, Cointelegraph is saying when Bitcoin hits 116, 6 billion in shorts will be liquidated. Did we hit 116 yet? I think we've been below. We're just, we touched it for a second. We're at 115.5, or we're going to have to sustain above it. But you've got a lot of people that went short over the weekend, and now they might have to be getting rid of those shorts because obviously if Bitcoin makes a move back to 125, almost as if nothing happened, you're going to have a ton of shorts that get liquidated, which only reinforces the bull case, as bulls end up getting a lot more money coming into the ecosystem and shorts end up covering on their position. So I just kind of think we're going to be all right. No one knows for sure, but we'll find out as we get into it tomorrow. and see how this plays out. Do you think Tom Lee added to BMNR? We have some blockchain-based evidence that he did add to BMNR, $480 million potentially. Now, we don't know for sure. We'll get an update from Tom Lee hopefully tomorrow morning. But yeah, it looks like he bought the dip. It looks like he bought the dip aggressively. So not too bad. Not too bad at all. And again, maybe Monday's not the day where everything gaps up. Maybe it takes time. Maybe we like have a more natural recovery over the next month. Maybe like end of November. I mean, like, hey, let me ask this question. I'll put a poll as well in the chat. S&P all-time high was what? 670, 673. We're at 660. How long do you think it takes to get back to all-time highs on the S&P? How long do you think it takes? Let's do a poll right there. How long till S&P all-time highs? Less than 1 month, 1 month plus. Just two options, less than 1 month, 1 month plus. I mean, dude, if it happens like tomorrow, would that surprise anybody? No, because we lost it in a day. What if we get it back in a day? I mean, remember in April, we had the S&P 500 move 10% in 2.5 hours. It was the greatest rally for the S&P 500. That was after DJT said it's a great time to buy in history. So the market has already proven, as per the case study in April, that they are ready to buy when they get the signal from the administration. And I think Trump, with this China tweet, gave the signal. Now, he didn't give as explicit of a signal as in April, and maybe there's going to be some more jockeying around of just like, do we need to still be tough on China via these tweets, which ends up hurting whatever rally could happen. But if this is the signal, maybe it happens sooner than later. And so we're going to have to see. We're going to have to see how this ends up playing out. Amit, what do you think about Robinhood on Friday? Okay, so let's talk about this. Obviously, Robinhood did not get the best rap on Friday. So there's two things to talk about this. We'll spend 5 minutes on this real quick, and then we'll move on. What happened on Friday, to the best of my understanding, is that when there's a $20 billion crypto catastrophe, as we saw in terms of liquidations, it's not just Robinhood. It was every single exchange. Some of them were better than others. I will say that. But there was plenty of exchanges, and you could just scroll on Twitter if you don't believe me and read about what people said about Binance and Webull, et cetera, not being able to execute orders on time properly. And as a result, on Robinhood, because it's one of the biggest exchanges, you had a lot of screenshots showing that Robinhood was rejecting your order. And obviously, that was not the best in the world. I do agree with Josh's take right here, that I think is really important to give some credit to. Josh says, I've seen so many of these posts on Hood from yesterday's market dip. For stocks, people must realize that Hood is only routing orders. It isn't their fault of the exchange they route it to if it doesn't fill. For crypto, you may have somewhat of a gripe, but you must realize it's about liquidity. Hood and other platforms who offer crypto are having to deal with this in real time. In crazy events like this, there isn't just enough to fill orders. This is like blaming Apple for your iPhone delivery being late because the UPS truck broke down. I am not absolving all guilt from Hood based on this metaphor, but I do think it is a very solid metaphor that it's like blaming Apple for your iPhone delivery being late because the UPS truck broke down. When it comes to crypto, there's a lot of complicated ways that the orders actually get filled in the midst of a liquidation event. Now, I know a lot of people might be saying, well, what's the point of having my crypto on Robinhood if I can't sell or buy when these high volume intensity moments take place? You have a point, and maybe your crypto should not be on Robinhood. But on Binance, which if you read into what happened on, there's too much to go into, but if you just search on Twitter Binance crypto issues, you will read paragraphs and paragraphs of internal flaws in Binance's platform that quite frankly contributed to the 19 billion of liquidations because of just how the orders were routed. And it's not like you're that much safe anywhere else. Now, maybe you might be, and maybe a lot of people say, hey, they want to take the crypto from Robinhood because they just felt this was so shady. That's going to happen. And if it happens, Robinhood will have to deal with the repercussions of that. But I don't think Coinbase was perfect. I don't think Webull was perfect. And I got a lot of people in the chat already saying that, hey, actually, Hood was able to fulfill some of my orders, but on some other platforms, I wasn't able to get filled. So the broader point here, yeah, Lunar saying I bought just fine. A ton of people said they bought just fine, but I tried buying when I was live with Steve and my order didn't go through. So I personally experienced, I tried to buy some Ethereum and it got rejected by the market. My perspective on this is very simple. If you hate what Hood did on Friday, that is fine. And as a result, you can choose to either leave the stock or you can choose to take your assets off the platform. However, the people insinuating this is some grand conspiracy to screw over the little guy, I think are not necessarily the most, I guess I'll say, intelligent people on this issue. Because Hood has zero incentive to screw you and get their brand to get a bad rap and not make money off people buying and selling, because that's how they make money in the casino that is crypto. And they make a lot of money when it's super volatile. There's zero incentive to do that. There's just no incentive. Like just think logical. Like, I know we love conspiracy theory, but let's just be logical. Why would a company not want you to trade? Their whole business is based on trading. There's obviously internal issues in terms of liquidity, which Hood should resolve 1000% as a shareholder. Like, yeah, they need to resolve that stuff so it becomes a more trusted platform when you have these types of volatile moments, so people can trust it and actually use them as a form to hedge, buy, sell, etc. But I don't think Vlad's in some room thinking, hey, how can we screw over people when crypto goes to shit? And I don't think that was the same with GameStop or AMC. And I know people disagree, but it is what it is. So if people want to take Hood back down to $100 because they're upset that there were broader liquidation issues in the entire industry for crypto and Robinhood got caught up in that, be my guest. I will buy like there is no tomorrow. But I don't think that's the case. I don't think Robinhood is shady. Is it a bad look? 1000%. It's a bad look. But it's also not a thesis breaker. It's just one of those things that they have to work on over time. And I think, ironically, with tokenization and stablecoins and blockchain infrastructure becoming more sophisticated, this will help the entire industry become more liquid. But when you have a $20 billion crypto sell-off, don't tell me this is Robinhood trying to create a conspiracy to hurt the little guy. Like, no, this is every single platform being like, holy shit, a Trump Truth Social post just wrecked crypto. People on leverage getting wiped out. I don't think that's a Hood issue that's singular to them. But look, they hurt the reputation this week with a lot of people. And if a lot of people choose to leave, then they choose to leave. I don't think it's, if you own the stock, I don't think this is an issue for the stock, quite frankly. I think it's a nothing burger. But I do understand the perception is not the best. I just don't think that affects the company long-term, especially when a lot of other companies had issues with crypto. So that's what I got. That's my take on Robinhood. And we're going to go from there. Pete Davidson is set to star in a film about Satoshi Nakamoto. You know, we keep trying to say this is not the top. We keep trying to say this is not the top. And then we get these headlines. That's actually kind of cool, though. That's not a toppy headline, right? That's a cool headline. That's not too toppy. Pete Davidson, a film about Satoshi. That's not too toppy. That's just cool. That's a crypto movie. That's something I'll watch. So, I mean, dude, look, for everyone who said it was a top, 673. 673 is what we got to beat. If we stay below 673, then I guess that is your short-term top. If we move above, then this was the dip that everyone was thinking was going to happen via that short-term top. And if we break above it, then this is the buying opportunity. This ends up being the buying opportunity. So that's what we got. That's what we got with the dynamics of what happened on Friday. Now let's get into some other headlines and we'll go from there. First of all, folks, we are back to earnings season. I am so excited. This is what we've got this week. Tuesday, no earnings tomorrow, but Tuesday, we've got a ton of earnings. Goldman Sachs, BlackRock, Citi, Domino's, Wells Fargo, JP Morgan, J&J, everything in regards to financials. Wednesday, you get United Airlines, Bank of America, Morgan Stanley. Thursday, you get TSM. That'll be a big one in the semiconductor space. And then Friday, you have some more banks. So this is an important week of earnings. It's not the most exciting because you don't have the tech companies. That happens starting October 22nd with Tesla. But yeah, it's going to be a big week for earnings. And look, these are the Delta, Applied Digital, Tilray, and Levi's already put up amazing earnings, like all four of them. I think Tilray is the only one whose stock didn't like move like crazy, but the rest of them had a pretty decent move in the stock. Applied Digital was just a massive move. If this can continue going into this week and then into the last week of Q3, or the last couple of weeks of October, which would end out the earnings cycle for Q3, again, like it's just how do you deny some of the momentum on these names? It's going to be hard if they put up good growth. Now, I think, you know, the conversation we've been having over the past couple of weeks is that multiples are excessive, right? S&P trades at 26 times, historically goes to 18 times. And the way we've been justifying the delta between 26 and 18 is, wait a second, AI is real. AI is not slowing down. This is one of the biggest changes in history. It's affecting everything. That narrative is also not affected by whatever happened with China on Tuesday. And if it continues to not be affected, then again, I think that narrative ultimately prevails and more money gets excited to come into the markets. Take a look at a couple of these charts. Goldman Sachs on Friday said that data center power demand will grow 160% by 2030. The only reason that's going to happen is because there is more demand for AI. And as a result, if there's more demand for AI, then there's going to be more people using these types of AI products. For those that missed what Google said on Friday, They are now processing 1.3 quadrillion tokens per month. That is 1.8 trillion tokens an hour. Once again, if you're keeping up with this entire AI narrative, you want to see that type of exponential growth, which is the type of growth that we have not seen ever in the history of humanity outside of the internet. And this is, blowing away the type of growth we've seen on the internet when it first came out. And that's a big deal. And that's inevitably going to be monetized, which is very important. This was the chart I showed last week. For those that didn't see this chart, I think this is the most fascinating chart that we've seen over the past 3 years in this AI ecosystem. The internet took 13 years to reach 800 million users. ChatGPT took 2. I mean, dude, in a couple years, we will have probably 50% of the planet, if not more. So we're talking about 4 or 5 billion people using AI every day. Again, does Trump China random tweets about rare earth metals or CPI really affect that? By the way, we're going to get CPI on October 24th. So the BLS came out and said we will be giving CPI October 24th, which is good. It's a couple days before the FOMC meeting. Hopefully CPI is not too bad. With the labor market going down, CPI is probably going to go down as well in a relatively decent way, unless the tariffs actually have an impact. But again, even Jay Powell's acknowledged the tariffs might not have an impact. And as a result, if you have a good CPI, you get more rate cuts into earnings growth. October 24th is at the peak of tech companies putting out earnings as well. It's in the middle of that entire week. If we get good tech earnings and then CPI growth or CPI degrowth in terms of inflation, and then you get a cut on October 29th, I mean, that sets up a really good scenario. By the way, it also sets up a really good scenario because now we made a leg down, right? So it's hard for stocks to move when they're at all-time highs on good news because there's already so much priced in. But when they take a retracement as violently as they did on Friday, and you have a bunch of catalysts coming up, you actually have the room, the momentum, the wall of worry to climb back up, which is also not a horrible thing going into the end of the year. Robin right there, 145, Palantir 179, S&P 660, BMNR overnight, that is at 55.60. All the nuclear names as well are moving. SoFi right there up 5.3% as well. And again, that chart by Goldman Sachs, it once again highlights that energy stocks are probably going to be a big part of the market that we can't ignore. And I'm not super allocated to energy stocks yet. I'm trying to do a lot of research, trying to figure out which ones are the best ones. Do you want to go with the boring ones? Do you want to go with some of the new ones that have transitioned into data centers? Do you want to pile into nuclear? I think there's a lot of work to be done by the end of the year to kind of position what 2026 looks like. But the point is, you cannot get this type of AI growth without energy. And it looks like everyone's going to have some level of exposure to it going into the next decade. By the way, ASTS, that one moving after hours. I mean, this thing was 91 last week. Massive move for the space names. Now it's back at 87. Again, you just got a lot of money that's already piling in the overnight markets because they're afraid that if this is the dip, and that's kind of my thesis on why Monday could be explosive. If you are afraid this is the opportunity, then maybe you jump in to get the best deal that you can get going into the end of the year. Okay, and the other headline I wanted to show right here, and then we'll talk a little bit more about crypto, is this. So take a look at this. XAI is creating a segment of their company to build world models to power video games. They've already hired staff from NVIDIA to work on advanced AI that can design and navigate physical spaces. So the Financial Times was reporting that XAI plans to apply world models first in the gaming sector. The models could be used to automatically generate interactive 3D environments and potentially be applied to AI systems for robotics. Essentially, Elon wants to take on the gaming industry, which is a massive industry, over $250 billion a year. One could argue that the gaming industry is, one of the most optimal spaces for AI to play a role in. And he wants people to be able to come up with any video game via XAI. Again, you're going to need a lot of computational power, a lot of data centers to make that happen. And as a result, just the more and more things that I see and that I get to share with you guys about just what's happening in the world of AI, the more it feels like this is not slowing down. And the more it feels like anything incremental from a macro perspective is likely not going to slow it down. But we haven't had a 3% day in 5 months, so we got it. I think one thing that a lot of you guys agree with on the market close, I did a poll of who thinks this is healthy. I think it was 87% of you said it feels healthy to finally get somewhat of a pullback. As annoying and as painful as it is, it feels healthy to at least know that markets are just not going to keep running up and that we're going to make a consolidated move down before we can make our next way up. And I think as a result, people took advantage of that dip. By the way, 76% of you said less than 1 month until the S&P gets back to all-time highs. I would have to agree. I don't know if it's going to take more than a month, especially given we have earnings catalysts, but we will find out over the coming weeks. Richard, thank you for the $20 super chat. Appreciate it, for keeping it real. Richard, thank you for being here. Deeply, deeply appreciate anyone who has kept up with the channel. Thank you for being here. Jock, thank you for the $50 super chat. Thanks, Amit, for showing the knowledge. Does Bitfarm trade in the overnights? I actually don't know. Bitfarm's 480. I think that's very low liquidity. Some of these stocks trade on Legend, even if they don't trade in the actual overnight markets on Robinhood, but it looks like that is green. Bitfarms was just above $5. So at 480, it's not that far below, which is not too bad, right? A lot of these data center plays, CleanSpark, Marathon, all these guys. CleanSpark up 3.7%. If Bitfarms follows the trajectory of any of these other data center names, it's going to gap up as well, as you're seeing with the rest of the market, along with IREN. So, I mean, for those that just got into these names and you think you got in at a top, maybe you get saved with this Trump pivot and you didn't get in at a top. I mean, if you bought IREN at 64 and you're annoyed because it fell all the way down to 57, if it gaps back up to 64, you might be able to take some profits and kind of remanage, or you might be able to say, all right, I'm okay. My entry is not horrible. And I think that's the cool thing about the kind of pivot that we're getting as well. Jock, thank you for the super chat. And Richard, thank you for the super chat as well. Amit, where do you see BMNR this week? It all depends on Ethereum. I think if ETH comes back to 4,500, which, look, I don't think it has to, but like, I also don't know why it wouldn't if this whole China thing is a nothing burger. Bitmine's probably back at 60. If it's back at 60, it's back at where most people bought it on Tuesday, which is also not too bad. Fork, thank you for becoming a channel member. Happy birthday, Amit. It is not my birthday, but I do have 2 more weeks until I turn 28. So we got 2 weeks left of being 27. And then Enzo, thank you for becoming a channel member as well. Hive, that's another one of these data center plays. That is up 6.8% in the overnight markets as well. I mean, again, it's just not stopping. It's just not easily stopping, and you need a lot more to make it stop. However, it's not to say that there's not some level of fraud. So going to Doug's comment right here, I'm going to pull up the Compound and Friends because they had a great podcast over the weekend. And there was this one stat in this podcast that was pretty incredible. And again, it goes to speak around how much money is moving on some of these smaller names that are out there. But as a result of those smaller names moving as much as they're moving, you might have more money just coming into the broader ecosystem. Nebius is at 134. We didn't even check Nebius. Where's Nebius? Nebius. Yeah, look at that. 134. This thing fell all the way to 115 after gapping up to 145. I mean, pretty much all the names that made new all-time highs Friday morning, a lot of them were making all-time highs. They got wrecked. And now they're kind of just getting back to where they were, which I don't think is too crazy if we are getting a legit pivot. Okay, so let me see if I can get this clip up real quick, because this is an important clip. Let me pull this up. Right. Oh yeah, here it is. So this is a stat around kind of how much is being traded in the smaller names that are out there, but are also being compared to the bigger names that exist. Let me play this right here, and it'll give a little bit of context of just the types of dollars that are being moved in this market.
Dollars traded, okay? Dollars of shares traded against the Mag 7. And holy shit, Rigetti, which is a $10-15 billion market cap, and Oklo and CoreWeave, which is approaching 100, MicroStrate's 100, those names trade as many dollars as Netflix and Google, which are, Google is a $1 trillion+ company. Is this wild or what?
Well, this is a function of what we were talking about earlier. Markets are incredibly efficient. Brokers are able to sell their order flow. And there are a bunch of institutional hedge funds who are willing to buy it and make a 20th of a penny on all that volume and gin it up. And we talked how it's becoming more like gambling for those names. Somebody's going to, I don't know, trade 100 shares or some call options and it's the 5% that's not in the S&P or in Treasury bonds.
So when you see this type of behavior, are you of the mentality that, listen, if this is your 5% money, trade your ass off, have a great time, does this bother you?
No, this is human nature.
Yeah.
I mean,
So-
this is
and
human nature.
Can I say one thing about this also? Well, what are there, 10, 11 stocks in this group?
I mean, I could have given you 20.
Okay, fine. But like in every market era, these stocks exist. They're just different stocks. So here are the names.
Not to this degree. You're right, but not to this degree.
So you have Qubit and Rigetti in here, which are and QS. This is quantum computing. What's IRAN? I still haven't bothered to Google it. Do I care?
It's
Stock goes up $5 a day.
Quantum aviation.
Get the out of here. All right.
Josh just pissed off all the Iran bulls, but it's crazy, bro. Rigetti's being traded as much as Netflix. Like that in and of itself is wild to see. And I do think that's not the healthiest in terms of the frothiness, which is why we needed a down day that we got. But you also can't fight the trend if the Fed is cutting rates and earnings are going to be good, because just more money is going to inevitably be allocated. And if some of those companies that are being traded as much as the Netflix of the world go to zero, again, if Netflix went to zero, that's an issue. If a random stock goes to zero that's being traded as much as Netflix, probably not that big of a deal for the broader bull market.
Fine.
What is that?
I
No,
made it
it's-
up.
it's-
Okay, good.
Nobody knows. It almost doesn't matter. Orbs and BMNR are these digital asset currencies.
And
One
MicroStrategy.
is Tom Lee. One is
Dan Ives.
Dan Ives. CoreWeave is AI. Strategy is another.
What's the point of naming
treasury.
all these companies? That's not the point.
Well, I'm just saying, like, if you pull these Joby Circle, if you pull these names out and you go back to 2000,
Nah. Stop it right there. Stop it right there.
you will find the same
stop.
version of
There's
that.
no way, I'm guessing.
School him.
Hold on. There's no way I am guessing that in 2000, that the companies that were in the bottom 20% of market cap were trading as much daily volume as IBM and Cisco and Yahoo. There's just no way. That's got to be different.
Because
Not
it
in
was
2000 because
There's
the
no
market
way.
was crashing, but in 99,
There's no way, dude. The small stocks were not trading
was-
as much as the giants.
it
No
was
way.
it was much more difficult to physically trade
Yeah, you
stocks in
couldn't.
1999. But how about this? And one of the things I write about in The Anxious Investor is that, and there's some wonderful research done on this. In 1999, if a company changed its name to include
yeah, .com.
web.com, any of that, it didn't matter what they did. They could be a cafeteria, but if they now became cafeteria.com, then the stock would zoom. It was like crazy.
We saw that in 17. They all became blockchain companies.
There you go.
We saw
Yeah.
that in. They're probably going to do that now with quantum.
And or anything having to do with blockchain or crypto or anything. And I guess if you're a shareholder, don't you want your guys to do that? Oh, we own this boring cafeteria company.
Depends how long you own the share for. Not if
Yeah.
you're a
Well,
long-term
but at
investor.
least, but now you have an option to sell at
They
a much higher
they
price.
arrested these guys who owned the deli in New
Yeah,
Jersey.
those are good guys.
I
Those
thought
are
they
good
were
guys.
I thought they were on Long Island.
Oh, that might have been.
I thought they were next to the place that sells the pump.
The broader point being, wait a second, if these names are getting traded as much as a Netflix, which, I mean, look, you can just tell from retail excitement. If you go on Twitter and search up one of these names that they mentioned, there's thousands and thousands of tweets about these names. Archer doesn't even have a real product out yet. And people gapped up Archer 20% because Archer posted a video of them showcasing a Tesla Optimus at the same conference that both companies were at. And just the sheer video showing off the Tesla Optimus, not doing anything with the Archer eVTOL, just literally being in the video, seeing the logo, people gapped it up 20%. There's obviously a lot of speculative money that's out there. However, the part where I think the bears have it wrong is that's not necessarily a top. You can't even use that as a signal for a top. You can use it as a signal for froth. You can use that as a signal to say, hey, I want to be more protected. But that is not a culmination of analysis that comes to the end of any level of bull market momentum. Whereas in 2021, when Meta and NVIDIA and all these other companies traded at aggressive multiples that did not have the earnings growth to put up to justify it, we were heading into a Fed hiking cycle because interest rates were zero because of what happened with COVID. And because of the Web3 level of excitement that ended up not being as explosive as AI. Again, NFTs just didn't matter as much as what LLMs matter for. Those were your three buckets in 2021. The most important companies in the world being aggressively overvalued, the earnings growth not being there, and then the whole NFT Web3 shebang that was supposed to be this like massive catalyst that never ended up playing out. And then the Fed raising rates. In 2025, AI is real, the Fed is cutting rates, and earnings growth are great. I am sympathetic to arguments about the labor market. I'm sympathetic to arguments about recession. I'm sympathetic to arguments about increased inflation. And I'm also sympathetic to arguments about why these random stocks that have no revenue are blowing up. But that is not enough, even if you have sympathy for those arguments, to make a definitive market call of we're done, we've topped, all of this is fake, it's going to zero. I think you just need something greater than that. And I don't think I don't think Robin right there, 146. I don't think we've got that level of analysis or that level of those types of events that are creating that level of fear in the market yet. And obviously over the weekend, the Trump Truth Social China stuff ended up not being the case. And so I think we go on. I think we further go on. But this week we'll get a much better understanding of seeing how this ends up playing out. And dude, maybe freaking the quantum names end up becoming so real and big and like important and all this stuff, and they're already valued like they are. Maybe they grow into that, and this actually ends up being not a sort of retail-led, momentum-driven trade. Maybe it's actually legitimate. And I know a lot of people believe that it will become legitimate, but like, what if it does? And if it doesn't and it goes to zero, okay, who cares? Again, this is not NVIDIA. This is not Meta. This is not Amazon. These are just random $20, $30 billion companies, which yes, $20, $30 billion is a lot of money. But if that gets wiped out, yeah, a certain section of retail is going to get wiped out. Okay. I mean, like eventually that takes some froth out of the system, which is not the worst thing. So we got to see what plays out. Are we rating Steve's stream later? Yes, we should definitely read. So Steve's going to start in 7 minutes. I'll end in 7 minutes. Steve is doing an alternative assets weekly stream. And you guys know the drill. We're going to rate it and just type CRN in the chat. So I'll put the link right here. Even if you don't stay for the whole time, if you just go in and type in CRN, it'll be funny. One thing Steve showed me today, which let me pull up, which again goes to show like just how different industries are being created across the board. Take a look at this. A Luka Doncic rookie sold for $4.7 million. 27.6 million of cards have been picked up by one of these groups that are trying to kind of say they're called secure collectibles. They're trying to basically create a index of trading cards. An index of trading cards called the Wondershine Index. Now, again, some people might see that and be like bubble because now people are going to be able to buy ETFs of trading cards. I see that and say, actually, and this is all coming from Steve, my knowledge of the trading card market, sports cards, Pokemon, etc. From what I've seen, from what Steve has showed me, is this is a legit industry. It's a legit market. There's legit supply and demand, and there are massive, massive amounts of groups of people that are participating in this industry. I mean, take a look at this. This was at one of NYC's conference over the weekend for sports cards. Look at how many people are there. Like this is a legit thing that people end up doing. And so something like that entering into the public markets of being able to trade alternative assets through some type of ETF, I think would be a very exciting product. But you have something that's custodied, right? That Luka, if the Lakers win a championship, that Luka Doncic card that sold for $5 million is probably going to be worth a lot more. Is that more important than some of these other companies that are, raising billions of market cap and have zero revenue? I mean, that's subjective. But at the end of the day, those are products that I think could be entering into this market versus just random names that are going up based on attaching something to their, to their website saying that they're associated with AI or blockchains. And I don't think that's crazy. I think that's actually rather healthy because you're getting a lot of new industries that are forming as a result of what's happening. It's the original version of NFTs. Yes. I mean, look, at the end of the day, I think trading cards, I don't understand why there's that much value in them, but the nostalgia of like a Michael Jordan rookie is like a big deal because Michael Jordan's brand is a big deal. And because it's physical, there is something legit associated with it, I guess. And there's a massive industry. It's hard to deny those numbers. We gave NFTs a chance. It's just they didn't work out. So it seems like the physical card industry will continue to play a role. Steve yelling at people in traffic with a trunk full of baseball cards. Exactly. We need to get a Steve rookie milk card. I would buy a Steve rookie. Dude, Steve is at 7,000 subscribers. I was talking to him today. I think he is one of the fastest growing YouTube channels in finance that I've ever seen. Like, have we like 7.16 thousand? He was at 0 2 weeks ago. Who's gone from 0 to 7,000 in freaking 2 weeks? I haven't seen that before in YouTube finance. And so like, I think people really do just like, love Steve as a human being and they care about his analysis. So I'd buy a rookie. I would love to buy a Steve rookie card as well. But it's pretty incredible, dude. It's pretty freaking incredible. Again, I think the big takeaway from everything that's happened over the weekend, and we'll talk a lot more about it tomorrow as we get into the market open, is that this train is not slowing down. No matter how much you try to slow down the train, it is just not slowing down. By the way, some historical stats on this is also pretty telling. On Thursday, the S&P 500 was at an all-time high. On Friday, crashed more than 2.5%. 3 to 12 months later, on average, the S&P 500 is up 12%. 1 year later, 9 out of 10 times, it's up at least 12%. So you've got a 90% chance that after a 3% pullback after an all-time high, the S&P 500 is up a year later. And if that's the case, and you've got earnings growth to support it, you're likely going to be able to see the market continue to do well, which I don't think is too horrible. So exciting stuff. exciting stuff. That's why Wall Street's the greatest show on earth, bro. This is why Wall Street is the greatest show on earth. And right there, as Laura says, if tomorrow's red, I think, dude, if tomorrow's red, I'm going to be buying more. Like if this China thing's not a big deal and tomorrow's red, I'm going to be buying more. And I think a lot of people would be buying more as well. So I think that is the Steve is your Nepo baby. No, but see, this argument doesn't make sense. For everyone saying, oh, Amit, well, you gave Steve a head start. Yeah, but Steve's been on my channel for 2 years, just calling in for 20 minutes every other day and talking. So no one would subscribe. Like if I tell you guys, hey, can you please subscribe to this random person? You'd be like, no, because I love you, Amit, but just because you're recommending to subscribe to someone, I'm not just going to blindly subscribe to them because I don't want to be annoyed with their stuff in my feed. I think the reason people subscribed is because you've listened to Steve for 2.5 years. So I think he's worked for everything he's got. Yes, I gave him a little bit of help to get started, but he gave me a lot of help over the past couple of years, just randomly showing up on streams and offering analysis. So I really do think this is his ability to cultivate an audience. And I think with live streaming, the most important thing is you got to be able to talk to an audience. Dude, yesterday when I left Steve's stream, he was going to leave 10 minutes after I left. He stayed on for 2.5 hours. Talking about movies, bro. Like, I didn't know that many of you like movies. I wish I could talk about movies as good as him. I would keep you guys for like 7 hours every day talking about movies. I mean, honestly, there's only 5 movies to talk about: Inception, Interstellar, Wolf of Wall Street, The Dark Knight, and High School Musical. There's not that many movies that are out there to meaningfully talk about. But the point is, he has the ability to talk to an audience, which is important. I'm acting like he doesn't stream for more than 3 hours every day. That's true. I do indeed talk and yap all day. But the point is, look, in terms of this bull market, I think we continue. I think for everyone that was scared or worried over the weekend, which is legit, I mean, there were some big moves that happened. Portfolios got wrecked. I talked to a bunch of people over the weekend. We're talking about millions and millions of dollars down on portfolios. Obviously, if Trump is pivoting, it doesn't look like it's going to be happening with you. If it's not, then I think we should be open. And the crypto liquidation was bad, but it probably got rid of a lot of money in the system. If it got rid of a lot of money in the system, that is also a really good thing. Again, $9 billion in the first 24 hours was liquidated. It ended up being $19.5 billion overall. It was a top 5 crypto liquidation. Mike, we're back. Mike is back. Dude, why does it randomly go out like that? It's so weird. It happens so randomly when it happens. It should be good now, right? Yes, yes, yes. Yes, good. Okay, well, we're ending right now anyway. So it just randomly happens at the end. I don't know why that happens. All right, cool. So that is it for me. Thank you, everybody, for being here. The last thing I was saying was just that, again, in the first 24 hours of this liquidation event, $9 billion was liquidated on crypto, top 5 liquidation event of all time. Ended up being $19.5 billion. A lot of people lost a lot of money. I think it's good to get a lot of that froth and leverage out of the system. And it looks like we should be moving to less froth, less leverage, which is overall good. Make the next leg up higher. All right. Having said that, is Steve live? All right, here we go. CRN, baby. That's what we got to do. CRN.
Really
That's what we're doing
grasp
on
how
Steve's
big it
stream.
is, and some of them
He's
do
interviewing
because
a
they'll
guy called
message me private things
Nostalgianomics. This
about
guy's
stuff.
awesome. His
But
name is Alex. They're
the
going to be talking about
Pokeball is
Pokemon
real,
cards,
and they came
alternative
after
asset
that.
investing.
So
The CRN.
it's definitely from
That's
your
what we're doing,
channel.
even if you don't stay for the
And
whole time.
Quote, Alex is
And then
exactly what is
CRN.
wrong with Pokemon and is
And,
a toxic
be done for the day.
aspect that is poison to
Steve's
the
going to be like,
hobby
what
as
is
a
going
whole.
on?
Can't believe you would have this dude on your podcast. His views go against every historical piece of data we have seen over 20.
Okay, so Steve's doing his thing. All right. Thank you, everybody. I'm putting the link right here in the chat. I'll be back Monday morning. We got a lot to talk about for Monday. Core takeaway is that I think we're going to be all right. And as a result, tomorrow might be one of the biggest days of money coming into the markets if people think this dip is the dip and they've got to get in. But we'll be live tomorrow and we'll see how this ends up playing out. CRN is currently right now. That is the, I guess, one of the phrases that has become popular on this channel. So there you go. All right. Thank you, everybody. Appreciate it. We'll be live tomorrow. I'll see you guys in Steve's stream. I might make an appearance. I might not. But if not, it will be a pretty exciting conversation because that Nostalgianomics guy that he's interviewing, this dude makes a lot of money in the alternative assets space. And so I think he'll have a lot of just like industry expertise he can offer to a bunch of people. So there you go. Thank you, everybody. Appreciate it. I'll be in the chat. We'll spam CRN, and I'll see you guys tomorrow on the Market Open. Bye, everybody. Have a good one.